Hello and welcome. I think we're going to go ahead and get started. So thank you so much for joining us today. We have a pretty exciting webinar, I think, for everyone. We want to talk a little bit about total rewards today. So I think in the last couple of years, there's been a lot on compensation. We have tools, databases, software that companies like PBO uses to help you do compensation analysis, where you can find out where you are benchmarked within your industry, with your size market, and where your compensation is. What we get asked a lot is about the total rewards package, more than just compensation. And that's something that there is not really a software or database out there for. So what we did is at the end of 2023, we did a survey of all of our clients, and we kind of asked some questions around total rewards and then shared the results with them so they can kind of benchmark for themselves where they sit with all the different benefits that they offer. So today what we want to do is kind of show you some of those results. We also have a panel of experts, each with a different specialization, that can kind of talk through their perspective on these benefits. So we have Sean Green joining us from Morrison Insurance. Sean has been in employee benefits for many, many years. He also sits on a lot of local and national boards. We have Nicole Devine, who's one of our chief people officers here at PBO with over 20 years of HR leadership experience. And then we have Christy Ficini, who is one of our CFOs, and she has the whole financial perspective for us. So I want to just talk a little bit about the agenda for the day and some housekeeping. We're going to go through kind of all the major areas and kind of just talk through some of the questions that we got ahead of time, and the panelists kind of thoughts on some of these, as well as anything you see on the screen is results from our survey. There is a chat box that you can put questions in, and a recording will be sent out after the webinar is over. And then let's just go to the next slide and talk a little bit about the survey we did. We sent it out to all of our clients, so we got a number of industries that are represented, all in kind of the small to mid-size market. So we just wanted you to be able to kind of see who is represented in this survey. All right, let's jump in and get going. The first area we want to talk about is health benefits, and I'm going to pass it over to Sean.
Thanks, Kristen. I will just say I was super excited when PBO decided to embark on this journey. The only data that's really out there is if you're 2,500 employees, no problem. You can get any benchmarking you want. If you're 50 employees, you're reliant on, really all I see out there is your insurance broker who might be part of a national group. And unfortunately, a lot of the times when it's us on the insurance brokerage side, you're not getting the cleanest or best or realistic data. So this has been a great undertaking to give to me, what I consider a much more valuable picture of the benchmarking data available. So if we'll jump to the next slide. And one of the most important things to me is 91% of the companies that got surveyed are offering health insurance benefits. And if you think back to 2 slides ago that Kristen just showed, over 50% of the companies that participated are actually under 50 employees. That's the business size segment. They don't have to offer any health insurance. So obviously offering health insurance is very important to local businesses, even when it's not required by federal law. And part of what you've seen is over the last 4 years is this competitive marketplace for talent here in Southern California that's forced business to get more aggressive in their overall package that they're offering employees. And right here, of that 91%, 42% of companies are actually paying 100% of the employee premium. And that's a pretty impressive number. I will say from what I see on a daily basis, that might be a little bit high. But when you factor in tech, life science companies here in Southern California, it's a very aggressive marketplace for talent. So you've got to be aggressive in what you're offering your employees. So 42% lines up. When you jump down, 37% of those companies are also paying for a portion of dependent premiums. What we do normally is at an open enrollment or the first time a business is deciding to offer health insurance, you kind of have to have that conversation of how much is the company willing to invest in their staff and in what these costs are going to look like. When you contribute as a business to the employee side, that's much more predictable than the dependent cost. Because again, when you go back to this survey, when 50% of the businesses are under 50 employees, it's very difficult to predict how many dependent members you have. You're looking at age banding rating on a health insurance cost, which means if an employee has 1 child or 3 children, that cost is significantly different. But you always know 1 employee is 1 employee, so it's easier to be very aggressive on your contribution there. And then as time goes on, you could bump up your contributions on the dependent side as well, depending on what your needs are in your own industry. Of these companies that were surveyed, 57% reported that they offer some sort of mental health coverage. This is kind of when I start to get a little disappointed in the industry. And I get it, everyone's busy. And if we were just surveying employees of these businesses, I get it. They get their annual open enrollment meeting and they forget everything from then on. So maybe they didn't realize there is mental health coverage. But this survey was going out to the HR leaders, to leadership of these businesses. And this is a shortcoming of a lot of people in our industry. We're guilty of it too, because if 91% of these companies are offering health insurance, I would say 90% of the health insurance offerings for small businesses include some form of mental health coverage. So that 57% should really be up in that 90% range if people understood what they had. So this is one of the things that everyone needs to learn more about to take more advantage. Same thing goes for gym memberships, for wellness benefits. There's a lot of these programs that are built in with the health insurance offerings. The health insurance companies, they're very smart, they're very good at making money. When you've got startup businesses that have been growing over the last 3 to 5 years, offering dedicated mental health services, wellness programs, the insurance companies, if you're United Healthcare, you just go out and buy them, you roll them under their Optum umbrella, and then magically you have an entirely new business line. But the Anthems, Kaisers even, there's a lot of these services that are built into the program that just people don't know that are there. And when you work with a firm like a PBO and you get more dedicated HR support, it's a lot easier to provide that education to your employees. And on our
John,
end, when we get to...
I have a question for you on that. If you could elaborate just for our attendees on what you actually define as mental health benefit, so people kind of begin to understand the definitions around that, so they know what to look for.
Yeah, so if you go back 5 years ago, Ginger was kind of what I mentioned as one of those brand new companies that were out there providing mental health services. And Ginger's offering was text-based mental wellness coaching. You could wake up at 2 in the morning as an employee and be stressed out, and you can in real time get somebody in a text chat and say, here's what I'm struggling with, and go back and forth. And then if that's not enough, that next morning you could on a virtual basis meet just like we are right now, basically person to person, and talk through your problems with a licensed therapist. Now, that really wasn't available to a company of 50 employees 5 years ago. If you wanted to work with Ginger, you would have a minimum spend of $10,000 per month. You know, when they first started rolling out, they were built to work with companies that were in the Fortune 1000 space. But as time goes on and the insurance companies realize how important these things are, they start to partner with them. Blue Shield was one of the first ones I found here in Southern California that partnered with Ginger. Then they partnered with Headspace. Then they became the same company. Headspace purchased Ginger, and now they've rolled up into a multi-billion-dollar organization. But Blue Shield has a partnership with them. Kaiser has a partnership with them. Anthem, same thing. They've purchased their own version of that exact program. And now you find on a daily basis, these employees have access to so many powerful tools that unfortunately a lot of people still don't even realize is available to them.
So Sean, as a as a CFO, I'm going out and I'm looking to acquire benefits, or I'm at my annual enrollment. Should I be asking if the Blue plans or the other Kaiser or whomever else I'm looking at include mental health coverage?
You should absolutely be asking for more information around what your current program has available. Because the solution is probably not going to be that you have to move or make any major changes. It's just working with a team that's going to support and provide information on what's already available and what's being paid for. We talk about how many companies are participating and providing benefits. We don't talk about the significant cost of these benefits. And Christy, you're very familiar. This is not a small investment for businesses to take on. And if you're going to spend the money, make sure you're getting the full ROI that you can.
Right.
I think this is such a big topic on mental health right now. Are there other, on top of what we can get through the benefits or the health benefits, are there other ways that we can kind of expand on the mental health benefits? Other things out there that are reasonably priced, affordable?
Yeah, I would say on a monthly basis, there's a new tech-driven option available. Some are more affordable than others. I will be very honest that when you're a 50-person company, it is very hard to take that cost on. I go back to, let's focus on contributing to the cost of the employee premium. Let's focus on contributing to the cost of the dependent premium. Let's make insurance as affordable for our team as possible. And then once we get our arms around that, let's start to expand on the additional benefits. Unfortunately, a lot of the additional programs in the mental health space that are just full standalone are still really built for the 100+ size segment.
And I think it's important to note, when we're looking at a total reward strategy and all of the different things that we offer, taking into account obviously your business model, your strategy, who you're trying to attract, retain, et cetera. But certain industries, like some, for example, in the nonprofit space, they do such emotionally impactful work that these are the types of benefits that when we're looking at burnout, we're looking at wanting to retain them and giving them a mental break on things. These are the types of services, and these are the types of programs we should look at to align to how do we look at the whole wellness of our employees to make sure that they get the break that they need in order to perform, get up and do the same type of work the next day. So I think what's really important on the people side to understand is there is not a one size fits all of however we build this and create this for our particular employees. Every industry has a different, emotional impact, or it has a different strain on the work model, whatever it might be. So what we see a lot on the chief people side is I get asked all of the time, well, what is everybody else doing? And what's really, really important, if you don't take anything away from this webinar, it should be this, which is what they do well is they ask their employees and they build what works for them. And they do take into consideration the external market, right, and how to be competitive, but you have to build what works for you and your demographic and your employees and build that right package. And that's what made them successful. So it's easy to look to the external market and say, oh, that's what everybody else is doing, me too. But the reason that that's successful for them is because they did the work to figure out what worked for their particular teams. So it's an important data point, but it shouldn't be sort of that end all be all.
Great.
Yeah. And then really quick, the last item that I did want to make sure to touch base on this is on the life insurance side. 57% of companies are offering employer paid life insurance. Life insurance is such a cheap, easy benefit for businesses to offer their employees. If you don't have it already, you get to look like the hero at open enrollment time and say, hey, we're adding another line of coverage completely for free for you. It looks like you're going out of your way to help your employees, which you are, but at the end of the day, it's a very affordable way to offer that additional benefit. And that goes back to that conversation of where are you spending those benefit dollars? Life insurance to me I have 3 young kids, so I look at life insurance. It's a very impactful benefit that people should be educated about, and businesses should make sure to, when available and when possible, should be rolling that out to their employees.
And I would even add short-term and long-term disability along with that life insurance bundle. We find it's cost-effective and has value when it's needed.
Absolutely.
And Sean,
Sean, I have a question for you. Sorry, go ahead, Kristen.
Sean, can your insurance broker kind of help you kind of write out some of these benefits that you get with these with the health insurance already covered and things like that, so that that's something you can bring to your employees, and you can really, even, when you're giving an offer or when you're talking to employees about the total rewards package, you're able to highlight some of these things that maybe we've already been paying for and we don't realize.
Absolutely. We're pretty fortunate here in San Diego, especially. There are a lot of great insurance brokers in town that are more than capable of going through all of this with the teams and just kind of do an overall assessment and say, hey, here's some things that we can do a better job educating about, and you can work with them. You can partner. May is Mental Health Awareness Month. That's always a good month to just, even if you renewed in January, come May, hey employees, here's these mental health care services that we have available. Make sure you're taking advantage, and your brokerage firm can provide flyers and information and help roll that out to the team.
I have a quick question too, actually, so I want to make sure I don't forget. One is on the multi-state, now that we're seeing people sort of move out of California, sort of how we're handling that. And the second one is, if you're part of, let's say your own entity, but you're part of a bigger network, right, of other entities. So we work with one particular nonprofit that's part of a bigger network, even though they're a single entity, right, their own legal entity. Can you talk a little bit about creative ways to maybe leverage that outside of, I know you're limited in terms of health benefits, but other types of benefits like long-term disability, et cetera. Is there a way to get creative and band together, like from headcount, et cetera, to get them breaks?
Yeah, for businesses under 100 employees on medical, if you're separate corporations, those rates are absolutely the rates. There's nothing you can do about it. When you get into what would be considered ancillary lines of coverage, your dental, your vision, your life and disability, they're still going to require some form of common ownership to have everyone officially connected. But at the end of the day, there's real underwriting going on for those types of businesses and those types of lines of coverage, which means if you're 20 different nonprofits all funded by the same main entity, even though those 20 different nonprofits are different business groups, if they renew at the same time, if they are all going to look at the same exact packages, you can absolutely have a conversation with some of those ancillary carriers around, hey, there's 20 businesses that are all doing the same thing. We would expect some sort of packaged discount program, even though they're going to be fully separate entities. So yes, there's ways to work on that and provide the best benefit possible to companies in that space.
Okay, and the multi-state one, which I'm sure is applicable to a lot of folks there.
Yeah, multi-state, obviously here in California, we're employees are pretty spoiled. We have a very robust short-term disability program managed through the state of California. What happens now, though, especially in the last few years, all of a sudden 20% of your workforce is outside of California. What do you do as an employer in that size segment? Because hey, I don't want Samantha, who just moved to Arizona, if she wants to have a baby, I want to make sure she's going to be protected. But as an employer, I don't want to take on that financial risk and pay for it. So you can absolutely structure short-term disability policies where you can do it where maybe in California, maybe your employees will still get a small bump on the benefit that the state is giving them. And then out of the state of California, they're getting a full standard short-term disability benefit. Or if you have enough people fully out of the state of California, you can structure a program where it is only your out-of-state employees and it mirrors the in-state program, which, by the way, has continued to get more and more robust year after year. So it is a pretty strong benefit these days.
Great, thanks. Okay, let's move on. Hit another topic. Let's talk about PTO, or paid time off. And Nicole's going to go ahead and lead us in this area.
Sure. So this was an interesting slide for us. And I'm not going to necessarily read through the entire slide because everybody has access to that information. But I think what was interesting about this is we've seen a lot of people, because of the new California sick leave laws, et cetera, a lot of the sick policies that have come up, those are huge, impactful financial impacts to our budgets. And so we have really begun to see a lot of the small market shift to this PTO, which is, and by definition, that means taking in vacation and sick together, so they can all wrap that into one. So what is the downside to that, of course, and Christy can speak to this, is that you have to pay that out, as opposed to when you carve them out. So we've seen some really interesting things in this space. What was eye-opening to us was that when you look at the holiday pay, there was a significant range of holiday pay that we saw, and it went anywhere from 4 days to all the way up to 19 holidays. And here's what I think the strategy was behind that, because some of them are my clients, so I'm aware of the strategy. Part of that was because it impacted mental health in terms of being able to completely shut down now that we have access to this 24/7, right, between our phones, between our email, and we are remote, so people feel this limitless boundary, right, to just sort of ping you whenever they need to. So part of that was, A, we didn't have to pay it out, B, people really got to spend time with their kids, et cetera. And then the other part was everybody else was off in the company. So they also weren't pinging you with a bunch of different things. And so we looked at things a little bit differently in terms of how can we provide the mental break and the time off and sort of meet the needs of burnout and sort of retention in that space. So we tried to get a little bit creative in that. So I'm sure, Christy, you can speak to the financial implications of those. But that's what we were seeing.
I think, as you mentioned, the movement to PTO is driven by a couple of things, but sick being really the predominant factor, because the compliance and the sick rules vary by state. And as small businesses are now being present and having a presence in multiple states, it's really important to understand those rules. But the sick leave not only varies by state, but it also can vary by county. So there is a workaround for businesses that are trying to manage the financial burden of throwing that sick leave into PTO and having to pay it out, and that is front loading. So you can talk to your HR professional or someone on Nicole's team to learn more about that, but you can front load your sick leave and then still maintain a separate vacation policy that allows you to, the sick is a use it or lose it kind of thing and renews annually. But then the vacation is paid out if someone leaves. So it keeps your liability down slightly.
Yeah, and to that point, administratively, it's not a nightmare to track, right? So when you move into the accrual, there are all these other rules you have to be cognizant of. So not only is there a certain level of education that you need on your HR team's behalf and or whomever administratively runs that program, but you have to look at whether your systems are in place in order to track that correctly, and are they keeping you in compliance. So, you need to think through your strategy from a business model perspective, which is, if we're going to continue to grow administratively, can we even pace what we're trying to do, right? So to Christy's point, front loading that 40 allows you to say, okay, that's a compliance, and now we can move on with our day. And you can put in 90-day benefit waiting periods, right? So even though it's front loaded, you can't actually take the entire 40 or whatever that might look like. So there are ways to get around it and create it creatively from a policy perspective and still meet the compliance and the financial impact to the company. So, okay, so let's click to the next slide, because I think that this is a little bit more of a drill down. In terms of, so for those of our clients that actually took the survey, you received the entire deck and the entire report. What we're showing you is sort of a recap of some things that we just pulled out to drill down a little bit on the PTO and vacation sick and paid time off space. So on the paid time off piece, what's also really important is we were seeing a lot of unlimited PTO. This was an attraction and retention tool. And some of the challenges with that, what we saw was, for example, how will you handle that when you go out on a leave of absence? Because in the state of California, your threshold now is 5 in order to do California Family Rights Act, which means now I'm on the hook financially to pay, right, like PTO the entire time somebody's off. And so we have some carve outs there, right? We work with our legal teams to make sure there's some carve outs to help protect us from those types of things, like unlimited PTO as applies to leaves of absences and or even things like bereavement leave, et cetera. So, but what was interesting was of the companies that answered yes, 76% of those, again, we saw that trend moving, were offering the PTO package. So they were choosing to combine, which is very different than what we've seen in the past. So I will say that's what we saw in 2023. We'll do this survey again in 2024 now that the sick leave compliance is shifted to see if it moves the needle at all. But again, pretty standard in terms of the 10 average paid holidays. And then of course the average days of vacation or PTO. And again, this is important to note, this is what was offered within the first year of employment. So obviously it gradually increased as you stayed with the company.
Nicole, you kind of touched a little bit on the unlimited policy, which has been a huge hot topic. Can you kind of go through some of the advantages or pitfalls to having an unlimited policy?
Yeah, so where it gets sticky outside of the leave of absence component, so that's one piece of it.
Yep.
The other part where we're beginning to see some legal interpretations of these policies is really around the control of whether or not it's truly an unlimited PTO, meaning you request time for, paid time off and it's not granted, then it's not really unlimited. And so what the courts look at is it to the employer's advantage to offer unlimited PTO policy and not have to account for that, right, on the books? And so, but then they're not really granting employees unlimited paid time off. And what we're seeing from a market perspective is when they shift to an unlimited PTO, most people actually don't take the PTO, which is fascinating. And what the studies show is that what they believe to be happening is it's because they don't really believe their leadership team that it's okay to take time off when they need it. So it's this really interesting, you think you're doing the right thing and offering this unlimited PTO because it's aligning right from an attraction and retention tool. But when you get in and that practicality feels different, or you don't really believe that that's what's happening, or there's any kind of parameters, and you are, for the record, allowed to put parameters around an unlimited PTO. We have a consulting company we work with. They offer an unlimited PTO policy, and performance metrics are sort of put in there. You have to be able to deliver on your performance, right, in order to be able to, and or even from the insulation of business risk, which is, hey, not everybody can take off in December. We have a company to run. So you are allowed to run a business and offer the unlimited PTO piece. Administratively, obviously very simple to run, right? In that, other than the time off request piece, but the education to the middle management, the leadership team on how to actually engage with your employee and have these conversations around performance, around being able to take that time off, that's where we get kind of sticky. I think that's where the wheels come off the bus, quite frankly. And Christy, you can talk to that because you work a lot in the tech field, which I know is pretty popular in that industry.
I do, and that's what we're seeing too. The people who wanted to adopt really quickly took a pause and a breath, and as they did their research and kind of learned more, they realized just the administration to it might outweigh the actual benefits that the employees think they're getting up front, but then don't end up getting. So we've seen a lot of people who were eager to do it and then paused and now still haven't converted because they have seen the pitfalls.
Yeah, and I think it's important too from a financial impact to understand when you shift to that model, you also have to pay out anything that's on the books, right, from any previous vacation policies or anything that was owed. So there's a financial impact from a cash flow perspective, et cetera, that needs to be considered when you're making those types of shifts. So, and really what I will say, Kristen, in that space is what we saw was a lot of me too. See, I offer this me too. With, to Christy's point, not thinking through, this is the impact, right? So, and does that main metric, which is it attracted the talent we wanted and retained the talent we wanted, is that actually happening?
Yep. Great. Thanks. Okay.
All right, that was it, Michael. Next slide.
All right, and then Christy's going to take over with retirement benefits.
Sure. You know, offering retirement benefits is just another way that employers can show their appreciation and value to their employees. It's not like a real-time, I feel it immediately benefit, but it is the right thing for you to educate your employees on, because so many of today's have not saved for retirement. You know, I saw some statistics recently that I think it was 57% of employees do not have funds available to go out and buy a new iPhone, which is crazy to me. And then another statistic was 36% of employees who live paycheck to paycheck make more than $100,000.
Wow.
And so it really underscores the value that employers are bringing to their employees by offering some kind of retirement plan. So our study showed that most employees are doing that. 82% of employers offer retirement benefits to their employees. And of that, 75% offered a match. When we're talking about 401k matches, you typically fall into two categories. Both are safe harbor matches. One is safe harbor contributions. One's a match, which is 3% of the employees' contributions are matched 100% dollar for dollar from the employer. And then the next, the employer pays 50 cents on the dollar for everything between 3% and 5% of the employee's contributions. And what we see in practice is that this is a less expensive safe harbor option, because unfortunately not everyone contributes. And what we also see is usually their max contribution is around 3% if they contribute. They typically don't go up to the 5%, depending on your employee base. So it fluctuates based on your employee base, but that's what we're seeing in medium to small size businesses. The other safe harbor contribution is a 3% non-elective plan. And what that does is that gives employers the benefit to contribute up a minimum amount of 3% of their compensation. So the way we see that as a retention tool is when they're issuing offers, they're telling their employees, you know, here's your base comp, here's what you're going to get as a contribution to your retirement plan in the amount of 3% of your base comp. And it's just a great tool to come out of the door going, hey, we care about you, we care about, you know, your future, and contributing to those retirement benefits. I think we had an early question about CalSavers. CalSavers has some limitations. It's only available to California workers if you don't have an existing retirement plan. So there's some limitations around that, but if you don't have a plan today, it is something that you should consider as you're looking to move into the retirement as a benefit to your employees. I do want to address there's a new legislation, Secure 2.0 Act, which covers in California employers, which doesn't go into effect till January 1st, 2025. But if you have on your roadmap and you're part of the 18% who currently don't have a retirement plan, you should definitely look into it this year, because currently they're offering some grandfathering. If you decide to go in before this Secure Act goes into place, you are not required to have auto enrollment, which provides an extra admin function that for small businesses, it's just extra work that you can get away with not having to do if you decide to start your plan this year. We did want to talk a little bit about stock options. We had 20% of those surveyed who do have some kind of equity option and plan. From small businesses, we see stock options more on the venture-backed companies, tech companies. That's a prevalent offering. But we also see stock appreciation plans, which is kind of marked against the increasing value of your business. And so employees can feel a part of the growth of the business and get some financial reward. It is just truly an incentive bonus plan that's a multi-year plan that is marked against the increasing value of the company. So it's not as formalized and doesn't have all of the bells and whistles and legal requirements associated with stock options. But it's another avenue to consider if you're looking to get your employees more engaged with the increasing value of your business.
Yeah, and I think what's important on that part is, again, when you look at attracting and retaining talent, it really comes down to what do we think we need, right? So if you're in that startup phase, for example, and you realize, okay, we may need to put that kind of longer term, right, for builders, like at the executive level to come in to stay and stick and help us build. That's what we mean when we say think about your business model. Where are you within your growth cycle with respect to the business? And what do we need in order to get this to meet the longer term strategic objectives? So all of those things come up in conversation. And what's really important is how do they integrate, right, and to tell the entire story from a total rewards perspective. So it's really important. So there is this compliance piece that we all have to comply with. And then with that, understanding from a talent perspective, who do you need on board in order to ensure that you stay within compliance, you understand the financial implications of these types of programs, and what resources are you bringing to the table, like, you know, Sean or Christy or anybody that's within your arsenal of resources to help you understand the programs, the financial modeling and implications of those programs, and then the retention and attraction as it aligns to the business model. So people really hang their hat on compensation. It's the first data point that they want to understand about their job. And rightfully so, we all have bills to pay in our home. We're all trying to move forward, but there's also this entire reward where people don't really, unless you're in the CFO world or the finance world, or quite frankly on the HR side, and sometimes not even that, you don't really understand the fully booked cost, right, of an employee. And so it's really important to understand all the things that go into affording employees from a total package perspective. Compensation is just one piece of it. So it's typically the most talked about data point, but it is not the only data point. And so it's just really important to look at the entire halo and not just these one singular data points.
It's probably a good transition into the alternative benefit rewards.
You're taking my job. Yes, let's get into it.
Well played, Christy. Okay, so that one's me, right? Okay, yep. Can we click to the next slide, please? Not that that one's not pretty, but okay. So 14% of companies hosted annual and or quarterly retreats. I have to say this is sort of on the rise, which has been interesting. We're seeing that a lot because it's shifting to the remote workforce. And so people are trying to figure out ways to bring people back together to sort of have that in-person synergy and get connected on a human level. So we have started to see a lot of our clients pull their teams back in so that they have some sort of touchstone. 36% of companies offered a bonus program. So I feel like this is low, but maybe that's just the clients that I deal with. And obviously bonus programs are usually at the executive level. Some are at the middle management level. I have some clients who do it, quite frankly, through the entire hierarchy of the organization, but I felt like this was a little bit low. And then 43% of the companies offered an alternative work schedule. So that's a big word, alternative work schedule. It means a lot of different things to a lot of different clients. And so some are offering 4 days a week. Some are offering the 80, I'm forgetting the other, not the 80s, where you have the entire week and then half days on Fridays. We have it where people have shifted hybrid, where they're only coming in certain days a week. I have some clients who are building just core hours. So they're only in Tuesday, Wednesday, Thursday from 9 a.m. to 3 p.m. And that's when all their meetings happen. And so we're really seeing some creative things happening in this alternative work schedule. And the main takeaway from it is really just affording them flexibility to work their schedule the way they need to as a professional and to build their personal life the way they need to. So it was really more around the focus of how can we provide flexibility and insulate from a business perspective. We are seeing a lot of people bring their staff back into the office also. So I would say, again, it has to work for you, whatever that might look like. So 13% of companies offered extra paid time off. Really, a lot of our nonprofits have done a lot of mission-driven activities. I work with a relatively big government contract company. They do a lot of mission-driven activities for that aligns to their mission for their employees. They do a fantastic job of bringing everybody together, and they do a team building event with that. And then they also have whatever aligns to their mission. They do a lot of volunteer work in that same sort of cadence. And so they have found that that's really what has bonded them to come to that organization to begin with. So they really champion that to work together because they have field locations. So we're seeing a lot of different things in the space, and people are getting very creative, again, to give the entire picture that integrates. Okay, let's see the next one, please. Okay, so this drills down a little bit more into what we have asked in terms of whether it's working from home options or what types of the schedules are you offering. And so again, the other thing we're seeing is the education benefit offering. So Christy can speak to this, but there is, the IRS has allowed for some tax exemptions in terms of being able to pay down employer-related tuitions. And I think they thought they would see more traction in this space, and they haven't seen a ton, but we are seeing that some education-related benefits are being offered. And as you look at professional development, you look at actual student loans that employers are paying down. Again, this comes back to, again, full circle, which is if you're not putting into your retirement account, and we're seeing really low participation rates, it could be because you can't afford, right, in your mind, in order to do that. So we're seeing employers offer things like even financial wellness training, personal financial wellness training, so they understand how to make their dollars stretch further so they can begin to put into place things like retirement and helping them pay down loans. So we can create this space, even if it's a mindset, to be able to afford things like retirement, et cetera. And so a lot of that also is in terms of professional development, where are we going to invest in from a human capital perspective? Are we going to put it in professional training? Are we going to put it in that personal development? Where are we going to place our dollars? And I'm sure Christy can speak to that also in terms of what she's seeing in that space.
Yeah, and I would say, I think tuition is still to come. I think that the abilities for employees to put pre-tax dollars against their tuition payments, that just hasn't taken up enough steam. I do think that that's going, because they still have to make the payments, or they will have to start making the payments again. There was a reprieve for a while, but I think when the payments start becoming due, you will see that program gain momentum. It's a great program. The other thing about financial wellness, I saw a stat recently that over 60% of employees report that they had financial stress related to their personal situations. And you know that if a person has financial stress outside of the workplace, that's coming into their 8-to-5 job or whatever hours they're working. And so you do, if there's an opportunity to offer that at a low cost, training or bringing in a facilitator to do a course or a class, it's a great low cost benefit because your employees potentially are suffering. And I would say, just generally speaking, understand your workforce, do a study, know your team, and know where their hot buttons are and what's important to them. The worst thing you can do is throw money at benefits that have no value to your employee base. So looking at all these alternative rewards is a great way to engage your team, to see what's important to them, and then really build that benefit package.
Yeah, and then I would echo after that, doing the education, continuing the education, making sure we're letting them know over and over again that these benefits are out there, especially with some of the stuff, Christy, you were talking about with retirement and stock options. I've worked with companies that offer stock options, and to the employees, they just don't care. It's not a big deal. And so, because it was important to management that they had some ownership, we did a lot of education and tried to bring it in so that the employees understood what they were getting from these stock options, so that they would appreciate the benefit. Yeah.
Yeah, I was going to say, I have a client that is an ESOP, and they do a really good job of doing an entire month of sort of educating on the ESOP and what it can bring and financial wealth and all this really stuff. So they do a great job in that way. So we're seeing a lot of creative things in this space. Okay, next, please. Okay, so this is a drill down on workplace arrangements, and we found that a lot of our clients really had offered this alternative work week or this flexible workspace, and so we wanted to understand what does that mean, because that had a lot of different definitions for our clients. So as you can see, a first pie chart really is about 70% actually offered a hybrid schedule, and 30% were actually back in the office. And so I think we'll begin to see that move a little bit. As we drill down further, you can see it's broken out into hybrid or remote. A lot of that depends on the position. There are just some companies that if you're a brewery, you got to be on the location to brew beer. So a lot of it is just dependent on the job. And so, we have to get creative in those type industries we're not going to be able to offer remote work or hybrid schedules, et cetera. So, and then of course the 30% employees having a hybrid and 21% having fully remote work. So again, it's really dependent on the company, and even some companies is dependent on just sort of the industry and the job, and it sort of dictates that. I will say, from a leadership perspective, I worked with one particular client who had a very interesting aha moment when we went out and did a lot of stay interviews. To Christy's point about what is it that keeps you here, what is it that, because value has a lot of different currency sets, not just money. So it's what does that total package look like? And part of what they came back with was, hey, we work in the field, we've been remote our whole life. And when the leadership team heard that, it was this really interesting aha moment of, oh, okay, so they've been doing this a really long time. And it's us that now have moved from the office out into our own home offices. And now we're just beginning to feel the disconnect that they're feeling. And so again, it was a really interesting aha moment for a client. So it's good to stay in touch with your team and get their perspective. Okay, next, please. So these were other interesting appreciation benefits that our clients articulated in this survey. So a lot of rewards and recognition programs, we see that a lot in state interviews. That's what our clients will report back. They really want the ability to recognize peer-to-peer for those platforms, and then codifying the rewards and recognition programs that really allow you to, again, even from a leadership standpoint, align on how you all reward. And so one team isn't doing it differently than another, right? So that you're, from a global perspective, it's sort of this collective that's moving in this way. So this is a long list. I'm not going to read through it. You can read through it, but we are seeing a lot of really interesting things come about in terms of the appreciation benefits. But for me, the biggest one I have seen has been flying everybody in for quarterly meetings and retreats, or bringing people together. It's expensive, but it's best bang for their buck in terms of what they're seeing.
Mm-hmm. Yeah, one of them, the birthday work anniversary, we had one respond that they send individual cards, like greeting cards, for each birthday, work anniversary, and for the birthday of all dependents and spouses in the family. So it there's some different ways, and it's getting that touch point. Everybody's got a different way of doing it. So we do have some questions I just wanted to go through. We usually talk this person was asking, they talk to their employees about benefits during open enrollment and then onboarding. So the question is there other opportunities to do this or other ways, to do more to get this out?
Go ahead.
Oh, no, you go.
I was just going to say 401k meetings are good, and you can tie in other benefits. Bring your advisor in to talk about that and maybe do it off cycle from your benefit meetings. Sean?
Yeah, I mean, I was going to say it really depends to me on the employer size segment and how they go about their business. If you're 100 employees, you've got probably a real HR department, that is there, and they know exactly what's going on. They're working on a daily basis or a weekly basis with your insurance brokerage. So they're very good at, as employees are onboarding, to educate them on everything that's available. Now, when you start to go down in size segment, when you get to a 50-person company, if you're not using a firm like a PBO that can layer in HR support in an amount of time on a per week basis that your company really needs, you've got one person that's probably doing payroll, benefits, and 3 other jobs in your organization. And depending on who you're partnering with on a brokerage standpoint for your insurance, that onboarding process could be, here, fill out this enrollment form, good luck, and maybe we get you on the insurance plan sometime in the next few months. Or maybe that one person that has 10 jobs is trying to remember to build them into your online enrollment platform and build them with your throw them into your benefit system. Or again, if you're with one of those firms in town that are really good at their job, you're onboarding an employee and you're just introducing that person to your brokerage team. And now they're doing all the work and they're educating that employee as they come on what's available within their benefits. So there's a lot of different ways that it happens. Obviously, I have my opinion on what I feel is correct. But if you're in that 50-person employer space, you need to go out of your way to make sure you've got the proper HR support that your employees really need, and then pair that with a good brokerage firm to make sure you've got your finger on the pulse of what your employees want and need on a benefit basis.
Yeah, I think actually what's really important about that is, so Sean's right. So having a really good broker is very important because that provides, especially the smaller organizations, with really the support they need to even have the marketing material, so to speak, to communicate. And yes, the inflection points we see most often will be onboarding and then at open enrollment time. But I think there are moments where when you're doing monthly check-ins with your employees and you're beginning to understand that they have burnout or they have they're overworked, whatever it might look like, it's really good opportunity even for whether it's human resources that's sending these things out to sort of educate the managers who are dealing at these team levels to understand what mental health benefits they have available to them, and to really educate and communicate often about what the benefits are. So even if it's just a text reminder that goes out saying, hey, we have these mental health benefits, et cetera, we have these days off coming, make sure that, here are all the things discount programs we offer you could take advantage of. We're seeing a lot of things on the family programs with respect to like babysitting. So from a DE&I perspective, we can open up the workforce, right, to sort of allow in multiple different, even different types of generations. So we have a lot of people who are in the sandwich generation and they've got little kids and aging parents, and they need care for both, and they can't access the working world otherwise. So it's really important, if those are benefits that you offer, to keep sort of beating that drum from a communication standpoint, even in performance reviews. However, you have something already built in. I will often say to clients, what do you already do in terms of communication? How can we integrate into a system you're already using? Because what I'm sure Christy and I can speak to a lot is anytime we add to someone's plate for yet one more thing for them to do, it's a really challenging thing to sustain and get, from a change management standpoint, get people to do. So what are you already doing? How do we leverage that natural current, and how do we just integrate from a communication standpoint into what we're already doing, so we're not adding yet one more thing? So even on a performance evaluation, really good time if you're doing performance evaluations to integrate in what's the total rewards look like for you, so you understand the total comp, not just as here's your 3% COLA, right, or whatever it might be. Really good time to begin to talk about all the ways we love to invest in our employees and all of the time, energy, and effort that we're investing into retaining people.
Great. Okay, we only have about 3 minutes left. So last thing I want is, can we go around and just, can each one of you say kind of what is one key takeaway you hope somebody gets out of this webinar before we leave? Nicole, you want to start?
Oh, sure, I will start. Okay, so my one key takeaway. Okay, so I think I mentioned one in the beginning, but if I had to really think through it, what I would say is 2 things. One, go look at what you currently offer now that you've sort of seen what others are offering, and what, as you think through what your employees want, I would say go ask your employees what they value. They will tell you, I promise. And then begin to understand, do what you currently offer align to that? And when you look at your participation rates, for example, as a metric in terms of, are people actually using this benefit? If your participation rate is very low, you need to begin to look at those programs, because if people are not participating, there is a reason why. And so we need to begin to understand from an investment perspective, we want to build the right programs so we're attracting the right people. So I would start there. Go ask your employees what they want. They will tell you, I promise.
Great.
I'll kind of piggyback on what Nicole said. During this session, she used the word stay interview, I don't know, 4 or 5 times, which is a word that doesn't get used a lot because people often use the word exit interview. Now, it's important to not only gauge and do the exit interview, but even more important to do the stay interviews, to get to know your employees and what's important to them.
Yeah, great. Sean?
I would just say make sure you're providing a proper level of education to your employees. You're spending a lot of money on these benefits, and make sure you're partnering with a team that's going to provide your employees with what they need to get the most out of it.
Great, thanks. Well, once again, thank you everybody for attending today. We really appreciate it. We have this recorded. We're going to go ahead and send out the recording and the deck after this call so that you guys can all go back to it and look at all the slides again. But thank you very much, and I hope you have a great day. Thanks.
Thank you.
Bye.
Thanks, guys.